Welcome to the Fear and Greed Afternoon Market Report for Tuesday, the 11th of May 2021, where in just a few minutes I'll tell you everything you need to know about what's happened in financial markets and the world of economics today. I'm Michael Thompson, in the studio this afternoon for Sean Aylmer. Well, we knew it couldn't last forever, but it might have been nice to get more than 24 hours out of it. After the euphoria of yesterday's record high, the S&P ASX 200 came tumbling back down today, falling more than 1% to close at 7,097 points. There was a sea of red across the market with 75% of the top 200 falling. The banks were down, healthcare stocks were down, insurers and logistics companies all fell. The big miners were down, even though iron ore prices pushed beyond $230 a tonne and demand from Chinese steel mills continues. But the biggest tumbles today came from the tech sector. Real estate site REA Group was off almost 4%. Accounting software Xero was down 3%. But the really steep drops came from the buy now, pay later companies. Their run has well and truly ended. There are a few reasons for the slide. The market ran too hard last year. There's an absolute plethora of players in the payment space. Market gorilla PayPal has launched a competing product, and there's growing concerns about regulators placing rules on the sector. It also didn't help that the Nasdaq fell by 2.6% overnight. The end result? The local buy now pay later stocks were absolutely hammered. Market leader Afterpay fell almost 9%. Number 2 Zipco was off 9%, recording the biggest drop on the ASX 200. OpenPay lost 7.4%, Sezzle dropped 5.5%, and Splitit lost 4.8%. One of the few companies posting a decent gain today, though, was building materials group Boral. The board has recommended shareholders reject an $8 billion bid from Seven Group Holdings for the company. The board says the offer was opportunistic and that it undervalues the company. At least one investor has complained that Seven is trying to take control of Boral without offering a premium. Still, though, there's a chance that some shareholders will sell, allowing Seven to creep up the register and add to its existing 23% stake in the company. The other big rise today came from litigation funder Omni Bridgeway, which has had a couple of strong days now. That came after confirming revenue from a class action relating to the Brisbane floods. The company closed today up 4.3%. Suncorp Chief Executive Steve Johnston says positive momentum from the first half of this financial year has continued in recent months. He says efforts to reshape and simplify the group are on track. Suncorp's brands include Amy, GIO and Bingle. The group closed down 0.7% today. In economic news, payroll jobs rose by 0.4% at the end of last month, reversing a fall from the previous fortnight. The Bureau of Statistics survey measured payrolls immediately after the ending of the federal government's JobKeeper payment. It's a little bit hard to take too much from it given that Easter and the school holidays were in the middle of April. But like the NAB Business Confidence and Conditions data on Monday and the ANZ Job Ad series last week, there doesn't seem to have been a drastic drop in employment in April, and that's good news. A quick recap of Wall Street. I mentioned the huge drops on the Nasdaq overnight as the heat comes out of technology stocks and investors start to return to the stocks that do well when the economy's recovering. The S&P 500 closed down 1%, with the Dow Jones pretty flat. The Aussie dollar is trading at around 78.4 US cents. And that's it for the afternoon market report for Tuesday, the 11th of May 2021. Of course, all eyes are on Parliament House tonight for Treasurer Josh Frydenberg's budget. But if you'd rather watch Lego Masters this evening, that's fine. Leave it to us. We'll bring you everything you need to know in tomorrow morning's episode of the Fear and Greed Business Headlines. I'm Michael Thompson. Enjoy your evening.